like Botswana, very much dependent on the global growth and global demand outlook, the US and China continue to be important sources of demand. That initially was not entirely bad news. We were hearing a lot about US exceptionalism at that point. The Fed had already concluded its tightening cycle, but US growth was a lot stronger than other G4 economies, than other developed market peers. Despite all of that tightening, we weren't really seeing, at that point in time, signs of slowdown in the economy. It looked as though the Fed had successfully managed to bring headline inflation down to more moderate levels. There were expectations that there would be interest rate easing in time, but markets were very measured in their outlook. Equity markets focused on this idea of deregulation, unleashing a new wave of growth. Could that have been misplaced? The record of equity market performance in the US year to date has told us a very different story. Now, also recall that there was a marked divergence between what we were seeing with US equity market performance and the sentiment that we were seeing reflected in bond markets. In recent years, part of this story around US exceptionalism, this super strong growth in the US by developed market standards, even after all of that Fed tightening, it had a lot to do with the scale of the US fiscal deficit that the government has been running. Almost 3 times the norm of what we would consider to be standard for developed markets. So instead of a deficit of around 2% of GDP, which is often seen, we have seen something closer to 6 to 7% in the US. Entirely different. And is it any surprise that the US economy was growing so strongly, given the scale of the fiscal stimulus implied by that? Sure, there had been monetary tightening. Sure, economists could content themselves with the belief that every cycle runs its course, that eventually the impact of that monetary tightening would be seen in the US labor market, that we would see it in other economic data. But at that point in time in November, equity markets were thinking, this is fantastic. There's going to be deregulation. And bond markets were selling off for a number of reasons. The first was this uncertainty around what the Trump administration would actually do with tariffs. Would President Trump, once inaugurated in January, proceed with the highest level of tariffs that had been threatened, possibly 60% against China, significant tariffs even against trading partners like Canada and Mexico? Would this be inflationary for the US economy? And a lot of market participants kind of contented themselves with the belief that President Trump really gauges the success of his policy by how equity markets are performing. So really, whatever the fears reflected in bond markets about the potential inflationary impact of tariffs, if he started to see a stock market sell-off, maybe he wouldn't proceed with that threat to impose tariffs. The stories we tell ourselves. Maybe I should have been a novelist rather than an economist. I still couldn't have made this up. The belief was that if he really did go ahead with the imposition of very significant tariff escalation, the impact in stock markets would be so severe that he would backtrack very quickly. Now we're in wait-and-see mode. There doesn't seem to be any indication, given what was announced last night, of any backtracking. But the other issue that worried bond markets then, and it's a consistent issue, and it hasn't really gone away, is how does the US actually finance this scale of deficit? The US, of course, has been very dependent on the rest of the world putting its savings into US markets, and that has helped to keep Treasury yields more contained for some time. There has also been a sense that the market has never really focused on the scale of the deficit, on the refinancing required. simply because the refinancing announcements to date have been quite benign. But the big source of uncertainty, given the effort that's going on with the Department of Government Efficiency, slashing spending left, right, and centre, doing it in a way that seems to have a lot of shock and awe, and maybe not so much thinking about the longer-term consequences of this, is the US actually going to be able to maneuver to a position where there can be confidence around the scale of that deficit coming down? So one of the big concerns is that the Trump administration probably wants to see an extension of the tax cuts that had been put in place in the first Trump administration's time, Trump 1.0, if you like. And if that's going to be the case, economists have always worried that simply committing to cut spending, even the way it's been done, is unlikely to be enough. It's not really going to be providing the scale of reassurance needed on the size of the US fiscal deficit. Putting this all together, what does it mean? Back in November, equity markets were rallying. They thought deregulation would be good for growth. It would mean new forces of growth being unleashed. Bond markets were a lot more concerned. Bond markets were concerned about the scale of the deficit, and we're not sure those concerns go away now. And bond markets were concerned about the potential inflationary consequences of the tariffs. One of the other stories we told ourselves back then, to kind of satisfy ourselves that it wouldn't be so bad, really, to reassure ourselves, was that it's not lost on anyone that a considerable amount of Trump's victory, winning the popular vote in the US, winning key swing states in the US election, had to do with the fallout that the experiences of much higher inflation under the Biden administration had left on many Americans. Trump was elected because Americans did not like inflation. Nobody likes inflation. Nobody likes the pain involved with inflation. So even though we were in an era of seeming US exceptionalism, even though growth was good, the belief was that surely Trump, recognizing so much of his election victory had rested on the fallout from inflation, he wasn't going to do anything that would trigger even more inflation. Today, economists are holding their heads. How wrong we were. Let's talk about Liberation Day, and let's talk about what was announced last night. Up until now, there had been the belief that there was going to be tariff escalation, and everyone was trying to understand what was behind it. There seems to be a belief in the Trump administration that one way to revive manufacturing is to make it that much more difficult for the US consumer to import what they need from the rest of the world. And maybe that kind of threat of retaliatory action against countries that have large trade surpluses with the US, goods trade surpluses, would bring manufacturing back to the US. Now, economists are very unsure about this. They question the premise of this. We all know that manufacturing tends to be attracted to locations where wage costs are much more competitive. It's really an open question whether we're ever going to see that manufacturing returning to the US, which is still a higher cost location from that perspective. It's also an open question, the MAGA base notwithstanding, how much do people in the US really want manufacturing jobs rather than service sector jobs? Do they want to be investment bankers? Do they want to be lawyers? Do they want to work in blue-collar manufacturing? So there are lots of unanswered questions. But one concern is that nobody quite understands the reasons behind the imposition of tariffs. President Trump says the word tariff is one of his most favorite words in the English language, that tariffs are a great thing. He doesn't tend to think of it as a tax on US consumers. What we've been noting in the consumer confidence numbers, and there's a marked departure depending on whether respondents are Democrats or Republicans, is that many consumers in the US have been very concerned about the impact that tariffs will have on the inflation rates that they face. So let's consider what happened yesterday. Not only the announcement of the 25%, was it, auto sector tariffs, and immediate imposition of the tariffs with the start from April the 5th of all auto sector imports into the US. And this will have implications for trading partners potentially. It'll have implications for Botswana, now that much more dependent on SAPU revenue as a source of its own fiscal revenue. But the belief was that we may not see as much of an escalation with this retaliatory tariffs. Up until now, no one had any foresight into the kind of formula that would be utilized to try to calculate the tariffs that the Trump administration would impose. What was announced yesterday was a formula that few had expected. The scale of the trade surplus, the goods trade surplus that countries have with the US was a factor in it. The US administration also seems to have looked at calculations, its own calculations, likely to be challenged by many, of its the perceived level of protectionism. So if it thought that exchange rate policy or different protectionist measures were being put to work to try to create this trade surplus with the US, they calculated an overall number. And what was announced yesterday was the Trump administration saying, we're going to halve that number, but that's the level of retaliatory tariff that we're going to impose against all these trading partners. And by the way, there's a 10% universal tariff imposition. So almost no one globally is spared from this at all. Now, lots of countries will be saying, how on earth does he get that calculation? How on earth does the US administration calculate that South Africa's measures put in place result in something like a 60% tariff, and therefore, in retaliation, the US is going to impose a 30% tariff on all South African goods? And for Botswana, my understanding is it's even higher. It's 37%. But the calculation aside, what the administration has said so far is that this is the baseline. If you negotiate how to do things differently, there may well be a reduction. If there are no retaliatory tariffs, this is as high as it gets. And if you do try to retaliate, the key question is which nations are going to retaliate? Is this going to spark a new global trade war? If you do try to retaliate, those tariffs get escalated. It's a very difficult bargaining position. The first question we should be asking is what impact of all of this on the global economy? Now, financial markets give us that lead into what might eventually happen with the real economy. And we know without any shadow of a doubt that today is likely to be risk-off for financial markets. For all of the debate, what does President Trump really want to do with tariffs? Does he want to bring manufacturing back to the US? Is it really being considered seriously as a revenue earner? Economists have their doubts about that too, because if you impose a tariff on something, you're going to impact whether consumers continue to buy it. It doesn't necessarily lead to a big increase in revenue necessarily. So they've got doubts about a lot of things. But on the basis of what has been announced, a few things have come out very clearly so far. One, this is worse than anyone had anticipated. It's really at the far end of what people had thought possible with the imposition of the retaliatory tariffs as it's been characterized. Some are saying this exceeds even the kind of tariff escalation that we saw in the 1930s. And we all know how that ended with the Second World War. So an open question now is, are we going to be seeing a calm and measured response from other trading partners? Or will there be the imposition of retaliatory tariffs with the risk then that they face an even worse situation? Many countries are taking the comfort. They're saying, well, this is something that is done to all trading partners. So it's not as though any one particular economy is being singled out. What it does mean is that China now faces tariffs of around 60% of what it exports to the US. Our economists in China estimate that at least 3 percentage points of Chinese GDP are reliant on US final demand. So no question about it, as much as there has been a diversification of trade, as much as China has started to trade a lot more with other trading partners, this is likely to come as a hit to global growth because of all of the uncertainty that it creates. The currency reaction is going to be important. There is no suggestion just yet that Chinese policymakers favor any kind of currency depreciation to keep their exports competitive, even with this escalatory tariffs that we've just seen. And this is possibly a good thing. One suggestion had been, well, the impact on US inflation will very much depend on how the dollar performs. And you could impose tariffs, but the overall inflation impact of it could be lessened if the dollar is strengthening against other currencies, because that currency strengthening offsets to some extent the imposition of the tariffs. It's neither here nor there. We know that if financial markets are likely to sell off, we could be in a strange risk-averse environment where normally in risk-off instances, the dollar strengthens. But given the nature and cause of this risk-off episode, there are real questions about whether we're going to be seeing this feed into consistent dollar strengthening. It's not that clear-cut yet what the Fed's reaction to this is going to be. They've been very measured with monetary policy. What all of this means, the suggestion so far, is that even if tariffs are imposed, the impact will be a one-off. It's not something that necessarily lends itself to sustained inflation, and that's how policymakers are looking at it. But there's great global uncertainty. The hope is that economies like China will use this as an opportunity to stimulate their own domestic demand. China's economy has been very reliant on its ability to export to the rest of the world. Domestic demand, because of the correction in property prices in the real estate market in China, has been very muted for a long time. And even though there have been stimulus measures, some local government level stimulus measures, other things being announced by China's leadership, it's not really been seen as having sufficient force to really stimulate demand in a big way. Will we be seeing another supersized fiscal package? Could we be seeing something much more nuanced? The hope is that other economies are going to be doing more to stimulate their economies, and this will lessen the overall impact on global growth. Many of you are thinking, oh wow, she's 20 minutes into that talk and she hasn't mentioned Botswana yet. Don't worry, it's coming. But we do need a proper understanding of what all of this means, just to outline the nature of the global uncertainty that we're currently facing. Yesterday's Liberation Day, the announcement of retaliatory tariffs, exceeded even the worst case expectations of many market participants. The uncertainty is very real. It was a tariff imposition, a significant escalation with respect to China, but even close US allies haven't necessarily been spared. The EU is hit with the 20% tariff. Recently, the reset of the global environment and international relations makes many European countries realize that they've got to take on board the responsibility for their own defense spending. So the changes made to Germany's debt brake, the further fiscal changes that we think we'll see that will allow for greater spending on defense in Europe, could finally be the trigger for something that brings about an economic turnaround in Europe. If we do see much more fiscal stimulus being announced elsewhere, and this is still uncertain for now, then the downsides to global growth could just be protected. But it's very difficult to make any sweeping comments just yet because we're too early in this process. We don't know if there will be automatic retaliatory tariffs elsewhere. If that is the case, the implications for global growth are going to be even more significant. So let me leave that discussion there. It's a long way of saying something big happened last night. Markets had completely miscalculated the likelihood of this announcement coming through. Economists are very uncertain about the impact that all of this will have on global growth. But we know that it's not a screaming positive. We can look for the silver lining. We could say China doing more to stimulate domestic demand, to rebalance its economy is a good thing. And in the long term, this could be good for Botswana. It probably is better for emerging market growth on the whole. Europe, a key trading partner for Africa, maybe being able to reignite growth through greater defense spending initially, but we will see the revival of industry and manufacturing in Europe. That's no bad thing for the global economy either. That could eventually be a good thing. The problem, the challenge facing economies like Botswana is that in the near term, the difficulties are compounded. I wish I could stand before you today and not look like an economist who got too little sleep last night, but there were good reasons for getting too little sleep. So let's talk about the outlook for Botswana's economy. We already know, for what was unquestionably, historically, Africa's most successful economy, that recent years have been very challenging. Botswana hasn't for a while been the growth outperformer, hasn't been close to it for some time. That overdependence on mining, the weaknesses associated with this have really come to the fore. We see it in the scale of the fiscal deficit in the current the last fiscal year 25, likely to be 9% of GDP. We see it in the deterioration of external balances because of the weakness of global diamond demand. And there is nothing out there, nothing on the immediate horizon, with US consumers, usually the consumer of the last resort on a global scale, having to be hit by all of these tariffs. It's not looking very good for the global diamond demand outlook at all. It's a very sobering factor. We're going to need a lot more time to look at the full implications of this for global growth, the full implications of this for global diamond demand, but there's no reason to think that any of this is going to be a near-term positive. And what it does mean is that Botswana is going to face even more challenging times potentially. To the extent that there was stresses in the system because of the reduction in mining-related revenue, let's not think that that is going to come back anytime soon. We know about recent ratings action facing Botswana. We know about the S&P change to the outlook of Botswana's rating from stable to negative. Moody's comes out with its own rating in the near term. And there's a very real likelihood that Botswana could be downgraded because of the reduction in both external and fiscal buffers. So the question we should be asking ourselves, and I'm sure we'll hear a lot of this from our esteemed panel, is what should Botswana be doing to reset? We know that there has to be a way out of these deep fiscal deficits, that it's not really an option for any country to run deficit after deficit, to erode the savings buffers that had been built up over time. There's been a substantial amount of that already. What should the immediate priority for Botswana be? And how do you cope with all of that when the domestic economy, the non-mining economy, which had largely held up to offset the impact of the mining contraction seen last year, is now at risk because of the electricity situation? We know that the challenges will be vast. Maybe just very briefly outlining the key things that needs to be done. First of all, when faced with this uncertainty, there's a policy prescription that's very important for all countries. And that is, do not be too reactive in terms of what you do. Botswana has been through past crises. The 2009 financial crisis, when mines had to be shut down for a period of 4 months, no one imagined that something like that could even be possible. There had been no forward planning for an event like that. The recency of the COVID crisis, where once again global demand collapsed, and now the threat faced not only by lab diamonds, making up 20% of the global diamond market already, albeit at a discount to real diamonds, but also the geopolitics and how quickly we might be seeing rehabilitation of Russia. So the policy prescription that economists would make is, we know Botswana has weathered crises in the past, but it's never really been able to emerge as strong as it was before that crisis happened. This is the time to really step up and not allow the crisis to go to waste. So if we were to reflect on Botswana's economic history, yes, there had been a great deal of past success, but a great deal of conservatism underscoring that, which may have impeded the diversification of the economy. Now there is a government in place that fully recognizes the necessity of accelerating that diversification process. It's no longer going to be possible for government to do everything on its own. There will have to be private sector participation. And perhaps the greatest opportunity that Botswana will face in all of this, it's looking like a very difficult, challenging, near-term environment ahead, is to be firm about what it wants to achieve in the longer term. Be clear about those objectives. With every policy decision that is being taken, the question that should be asked is, how is this lending itself to long-term diversification of the economy? How is this lending itself to long-term competitive strengthening? And if it doesn't meet the test of diversification, there needs to be serious question marks around whether that is the right policy objective. We could spend probably another 2 hours talking of the ins and outs of what needs to be done. But some sort of fiscal consolidation must be a priority. Botswana needs to look at this as its great opportunity for a reset. The IMF says there has to be scope, not just for expenditure reduction. We know that there is a critical need for infrastructure that might actually enhance growth. So look to do that, leveraging off all the resources that are available. Should Botswana be borrowing that much more from the multilaterals than it has traditionally? Absolutely. Is it likely to be hit by a balance of payments crisis? That looks very real. Could that multilateral borrowing be used as the anchor for a more comprehensive reform program? It could certainly be. And hopefully this helps with the implementation of the reforms that are required. Is this the time for Botswana to accelerate privatization? That would be no bad thing. It needs to be done out of necessity, but always with a view to ensuring that the longer term outlook, that the competitiveness outlook, that what is being done to boost diversification, that all of this are at the forefront of the minds of economic participants. So, in terms of immediate policy prescriptions, accept that it's going to be difficult to rapidly reduce the fiscal deficit. As much as there is a need to right-size government and to look at recurrent expenditure, it's difficult to do in a country, in an economy that is facing these multiple economic headwinds. Look at sensible borrowing. Explore all sources of concessional borrowing, but do even more to deepen the domestic debt market. Do even more, perhaps, to establish the avenues for external borrowing. I realize we've hit the 30-minute mark, so I'm just going to wrap up my remarks. At the 30-minute mark, I'm just going to wrap up these comments by a quick conclusion. There is a power sector crisis. Botswana would do well to think, what is the opportunity in this? It's not about being reactive to the immediate power sector crisis. It should be a reset for growth for the longer term. Choose greener sources of energy because that is what will give Botswana a competitive edge in the longer term. There may be weak growth in Botswana near term because of the pressures of the diamond market, but recognize that there's going to be significant growth in the Southern African region. Namibia with its recent oil find, Mozambique with the strength of its gas resources, even though nothing much seems to be happening in the very near term, build for the long term because you don't have the luxury of not doing that. Look at how to integrate more successfully using Botswana's long-standing economic strengths, its traditions of transparency and the rule of law, and what might make it even more attractive as an investment destination. Really welcome in the private sector and look at the kind of enabling reforms that will allow all of this to happen. I realize we're out of time, but we have a wealth of discussions still coming with the other esteemed panelists. And I'd just like to conclude by saying this. It's been a challenging time globally. Trump's Liberation Day doesn't really sound like Liberation Day to much of the rest of the world, nor does it sound very much like Liberation Day to the US consumer, because they're now going to have to pay even more for everything that they've consumed. We don't know how long these policies are likely to be put in place. We don't know if equity markets perform in a way that sends a very strong signal, whether there will be a backtracking of these policies. The safest thing we can say is that there's going to be a great deal more uncertainty. Botswana faces challenges that we're all very familiar with. But if we look at the history of economies that have built in resilience, that have managed transformative growth, they've all done it through an openness to reform, using potential economic crises as the opportunity to reset and establish a more comprehensive consensus for reform, and using that to build strengths in the longer term. So the message that I hope to leave with everyone today is, don't just think of this as the crisis. Think of this as the opportunity to maybe turbocharge Botswana's growth in a different direction, in an altogether necessary, more diversified direction in the future. Thank you so much.
It's going to take a little bit more time. During that period, not too much may be happening. And then what does that mean for countries like Botswana? I think that's a really important element to factor into. The other aspect for Botswana is, Botswana's headline tariff in that league table on Liberation Day is 37%, but 37%, that's a direct export from Botswana to the United States. That's a small portion of Botswana's economy. Look at the tariff that India is going to get for export to the United States, that's 26, 27%. And that's where all the rough diamonds are part of that 26, 27%. Middle East, Europe, 20%. How would that the tariffs work back in through the diamond value chain back to Botswana? I think those are serious questions. I'm sure the diamonds, the colleagues, the captains of industries in the diamond sector will have a much deeper understanding. And I think for Botswana, those factors will come into play over the coming few days and weeks. Back to Botswana. I think I'm going to use your headline message is how do we use the opportunities to reset. My colleagues and some of you in the audience, especially my finance ministry friends, have heard me repeatedly saying about this thing about thinking productivity. And I would add today that think productivity and think the long term. I do think Botswana needs to think through what's going to happen beyond the current cycle. Especially there's going to be a lot of time of waiting and waiting to see how things settle. The reason I mention the productivity is, the Botswana growth story, I think everybody understands, but the growth has been slowing down over the past 2 to 3 decades, right? But in the first 30 years of Botswana's independence, Botswana was growing at 7%. In the early 2000s to 2000s, Botswana was growing on average at 5% a year. After 2010, Botswana was growing at 3% a year. But then if you look deeper into the productivity growth, Botswana's productivity has actually been contracting around 1.6% a year over the past decades. What does that mean? That means for the same amount of inputs, Botswana was producing less in terms of its financial resources, in terms of its natural resources, in terms of its human resources. So for Botswana to continue to grow, that growth has to be led by productivity. There's quite a debate in Botswana says, this is public sector-led economy. Should we really introduce more private sector-led economy? But for me, taking that ideological debate element away, use productivity-led growth, and that should be really the lens how policymakers, how people in the country think about the growth strategies, both in terms of country and also as individuals, as firms. Now, of course, all the countries have investments, have budgets designed for social purposes, and rightfully so. For Botswana as a country, there's still a lot of poverty, lots of inequality that require more socially oriented interventions. But for economy, for a budget as a whole, if that does not give you that kind of productivity-led elements, then you will not expect your budget. You should not expect your budget to deliver the kind of growth you will get into because you know the inputs are not going to the most productive areas. So that's my point number one. The point number two, macro fundamentals. Now, this is not something we usually associate Botswana with in the past, but I think that's really an important point at this particular moment. And I do want to talk about fiscal consolidation a little bit. I think the Vice President and Minister of Finance was very explicit in the budget speech when he spoke about stopping the financial hemorrhage. And that has to be done. That needs to be done. Botswana doesn't have the fiscal buffer it used to have. And after hearing all the global uncertainties, boy, don't you wish you have a little more money in the GIA account to cope with what may be coming in the coming year. 10% of deficit is too high, and especially for relatively small economy and quite a vulnerable economy to external shocks. When you don't have a buffer, I'm sure my finance ministry colleagues don't sleep very well at night. So how do you do that? I think that's very difficult, especially when the overall economic situation is not in a positive territory. So I'm sure my friend Naledi will speak a little bit more with the government plans. But I want to mention one thing, which is the spirit of. Well, let me say this. Every time I go to UB, University of Botswana, I was reminded how UB was built. There's a Botswana sentence for it, but in English it's called one man, one cattle. Now, when people talk about fiscal consolidation, the tendency is always, you should consolidate the other person's budget, not mine. And that's not how it's going to work. Fiscal consolidation requires leadership, but also requires a very collective effort. And I really think this is a moment the whole government, the whole economy, the whole society needs to rally. I think Botswana is in a unknown territory that Botswana has never been to before. I think Razia talked about the global financial crisis and the COVID crisis, how Botswana recovered. Maybe I should say, maybe this time is different. I don't really know, nobody really knows, but I think it's because nobody knows. I think that gives everybody the nervousness of what's going to happen. And I really think this is the time there needs to be that collective spirit to weather the difficult situation together. Finally, let me just add, just to say that the point of how do you promote productivity growth. There is actually a set of principles how countries do that. You do need macro and fiscal stability. innovation and really change the way of doing things. And again, I think going beyond the short-term difficulties, and be proactive, looking for opportunities in the longer term. I think energy sector, Razia spoke about, that's a good example of how not to be reactive to the short-term crisis and think beyond the medium and the longer term and really put Botswana on a competitive advantage. A lot of focus on education. Botswana's human capital base is low compared to other middle-income countries. For Botswana to grow towards high-income countries, Botswana needs a much more stronger human capital base that's more responsive to the market. A lot of the infrastructure needs to be done, but infrastructure is no longer the traditional infrastructure. It is a new infrastructure. It is the digital connectivity. I think that's a lot of areas. Actually, I was reading the other night, Estonia rolled out e-government in a massive way after the global financial crisis. I think that's a kind of opportunity Botswana can leverage. And finally, public sector efficiency and performance. I think Botswana has a very large public sector, but how do you make sure the public sector use the opportunity to change it, to be more efficient, to be more proactive in policy making and policy execution? I think those are really important elements to propel Botswana towards a longer term, towards a productivity-led growth. Thank you so much.
As we love to say at Standard Chartered Bank, we'll give you back your time. And Liang has graciously given us like 4 minutes by cutting his presentation a little bit short. Ladies and gentlemen, I will now call upon Ms. Naledi Madala, Senior Policy Advisor at the Ministry of Finance, to answer the big question in the room. Naledi.
Good morning. It is an absolute pleasure to be here with you this morning. Let me start by really thanking Standard Chartered for honoring us as the Ministry of Finance with this invitation. Ramasupe and your team, let me acknowledge you that we see the work that you are doing, the nation building work that you are doing, the relationship that you have with government. We see it and we acknowledge it. The kind of solutions that you are always bringing to us on the table to say, think about things like this is something that we highly appreciate. Thank you very much for that. As I have already said, we do welcome an opportunity to engage. A couple of my colleagues are in the room, Dr. Said Timono, who is the Director of Research, and always happy to also jump into the conversation. I also see Tempo and Lucy at the back. But really to get to the conversation of the day, I think my fellow panelists have really said a lot. And I just want to start by saying it is indeed a world of worries. The task ahead is daunting, but our resolve to bring a turnaround is even bigger. And before I answer the question that has been posed to me, to really say that how is government responding to the challenges at hand in the short term and in the long term, allow me to just really reiterate some of the sentiments that have already been shared in the House, the world of worries that we are finding ourselves in, that, over the last few years, the tariffs are adding to the deeply structural and pervasive issues that have already been affecting the global economy over the last few years since COVID-19. The global economy has indeed shown some resilience, but it will be interesting to see the turnaround or the ability to show resilience and the kind of tariff gains or tariff issues that we are seeing at the moment. But what I wanted to add over and above what both Razia and Liang have said about the global economy is that I think as policymakers, we also need to have the nuances of the behavioral changes that this kind of landscape, has brought to the very citizens that we are solutioning for, and for the very consumers that as the private sector you are serving. I think that dynamic is very important, and I'll tell you why I think this is key. Because the consumer or the citizen that you are dealing with today is totally different from the citizen and the consumer that you were dealing with 2019. And I think that nuance is quite key. I was looking at the data that was looking at China, and what I realized, and Razia has already spoken about this, is that today consumer spending contributes around 80% to growth. And this is far much lower than where it was before COVID-19, which was sitting around 41%. And consumer demand and consumer sentiment indicators are at their all-time low in China. But I think what was really interesting for me is just to see how the policymaker continues to try to solution by bringing in stimulus to try and bring up this consumer sentiment. But what they are not realizing is that what the consumer or the very same person that they're trying to solution for that reacts by doing is simply to take that stimulus, one, bring down their debt or build up their savings, because they're just thinking about this current environment. And I think that nuance is so key, because the points that I'm trying to drive home is that the old ways of thinking or solutioning for policies that used to work in the past are really not going to work in this current environment, where we have seen significant demographic shifts, when we are seeing inward-looking policies, when climate change has also become such a big problem. My colleagues have already, my fellow panelists have already spoken about the rising inequalities and the low productivity. But I think the big question is, how does Botswana come in here? I think one of the things, the way that I'll try to answer this question, and I'm looking at time, the way that I'll try to answer this question is really to say, where is the baseline? We have operated on an economy that has been spearheaded by government-driven, that is the government-driven economy, that is dependent on SACU and diamond receipts. Both of those major revenue lines are under pressure at the moment. And the non-mining sector has been somewhat resilient, but the question is, can it really propel this economy to the levels that we need it to be, which is high income and industrialized status? The answer is no. So we have to be able to think about a turnaround, a new economic model that will bring this fundamental and rapid shift that we are all desiring for. And I really like what both Razia and Liang have said, to say, focus on the long term. There is a lot going on. And if we are going to react to everything as policymakers, then we are also going to create a lot of problems. Because this is happening today, doesn't mean that we need to respond tomorrow. Think about the long term and think about why the policy that you have made. Think about the reasons behind the policy that you would have taken. So I think in order to answer really, I'm going to highlight and offer a further distillation of some of the items that we had spoken about in the budget speech when we're speaking about building an inclusive and deep economy. I think for us, there are certain factors that have become very clear, and they sort of really influenced or informed the four interlinked strategic areas that we had selected in the budget speech, to say these are the four areas that we're going to be looking at in order to build this inclusive and deep economy. We spoke about addressing the deep dysfunctionality that has over the years really manifested as financial hemorrhaging. And I think when you're outside government, sometimes you don't realize the scale and seriousness of this matter, but the financial hemorrhaging that has been happening in government is quite significant. So we are really spending time rebuilding. I think for us it's not just about bringing the big bang policies, it's also about small little things that will cumulatively bring the big change that we are desiring for. So that is our approach. One of the things that we are immediately doing as the people responsible for influencing public finance management in the country is that we are, as a way to bring down this financial hemorrhaging, is we are going to make sure that planning across the entire government system is taken a lot more seriously than it has ever been before. And I'll tell you why this is important. I looked at some of the trends when we were in a recession. You will see that government will react by saying, we are cutting spendings, we are putting up a travel moratorium, we're going to do a hiring freeze, but that's a reactive matter. But then, I think we have not had a crisis that lasted long enough to allow those kind of thoughts and reforms that they would have thought about during a recession to be fully inculcated as a culture and as a long-term reform, then you will realize that immediately when the diamond bounces back, all of those thoughts are just thrown away and forgotten about. But I think the current environment actually allows us to actually be in such a difficult position for a long time, to be able to fully inculcate all of these thinking so that they become permanent and they become long-term. So we have been very strict about the issue around supplementary budgeting. You know, supplementary budgeting is allowed for or provided for in the Public Finance Management Act. But there are also very clear terms in terms of when it should be used. It's only when there's a disaster or when there is, something that you couldn't have anticipated. But the way that it has been done is just that, ministry just come anytime and come and ask for more. So I think this on its own can unlock a lot of value and ensure that there are some savings for government. So we are really tightening our screws about this. But one of the key things that we spoke about in the budget speech, and I know that the Minister of Finance is very much passionate and driving this one significantly, is the issue around driving efficiency in government process initiative. It's a very big initiative. Liang Wang often says that it's a dodge, but it's a good dodge. So what we are doing is we are looking across government and saying, if you are a certain department, we look at that department, and I'll give this example of the work that we are doing around government fleet management. We are asking ourselves questions that, should the government of the day really still be owning government fleets? Or should we be looking at reforms such as those which, and I'm not saying we're going to do that, but should we be considering reforms such as those which have been implemented in countries like Brazil, where they use a totally different model, and we find that they've been able to save billions, if not millions of dollars through those reforms, where they've been able to reach a point where the government actually doesn't even own a fleet. So those are the kind of things that we are thinking about to just unlock value. Because when you see how that department on its own, there's an opportunity to make it leaner, to make it more efficient. I think in terms of the big, in the budget speech, one of the things that we spoke about was, after we spoke about the four interlinked phases being how we are looking at government systems, how we are moving into stabilization and preparation for takeoff, where we spoke a lot about the state-owned enterprises and all the plans that we have for the state-owned enterprises. I wish I had time to actually get a little bit into that. And then we also spoke about some of the initial and tangible changes. Okay. And then we spoke about some of the tangible steps that we are already taking in the third phase. And you should remember that all of these phases are actually happening at the same time. It's not like one phase after the other. But the last phase that we spoke about was building a new Botswana. And I think that is where the question of what are the long-term big bang things that you are thinking about. I'll tell you what we are thinking about. We have a lot of ideas on the table, but we do realize the importance of starting with just rebuilding the structures, putting the right structures in place. Because I think for us, we do realize that it doesn't matter how transformational or excellent the strategies that you can come up with are, if you don't have the right environment to be executing those strategies on. So that is why for us, just starting with rebuilding the structures, putting them in place is such a key part of what we are doing. But in terms of the long term, we are thinking of, and a lot of work has actually already started. Dr. Said Timono is leading this piece of work where we are putting together work around a sovereign wealth fund, because we have realized that our Pula fund is not technically a sovereign wealth fund, and the minister has actually come back from Europe, where we've gone on to see how other people have done it and done it very well. And I think that is why even the thinking around not just reacting when there's a crisis and saying I'm cutting spending, is going to allow us that even in terms of when we are now able to have a surplus, to be able to do very well with this new sovereign wealth fund that we're going to put in place. And this is exactly what the Norwegians have been able to do, use a culture of frugality to actually build sovereign wealth funds and build a lot of wealth for their people. So when you think, the other example that I can when you look at, over the years, I think there's been a lot of talk about how our health bill is so significant, but when you look at the nuances of that budget, the health budget, you also realize that we're spending a lot on medical supplies. And the question that, the way that we approach this is to ask ourselves, but how do you reach a point where you can actually have this medical supplies bill? Yes, this medical supplies procurement. And the way that we are thinking about it is go the precision medicine way. You know, when you have, when you go into precision medicine, medical medicine way, you have the power, when you've been able to put all your people's DNAs in a system, in a infrastructure that is required, you have the power now to negotiate with pharmaceutical companies, to tell them, to give them a real-time feedback to say, hang on, I bought this from you, and this is the output, or this is how it has reacted to person X, person B, person Y. And that way, you are even able, you have power to even negotiate how you are buying those supplies that you are having. So something like that is something that in the future could actually really have or lead to significant savings for the government, but even just for the people themselves, because we find that cancer patients go through so many therapies because no one is sure. But when we are now in the new Botswana and we're talking about precision medicine, then you react with certainty in terms of what to do. So those are some of the things that we are looking at. I think we also spoke about the National Fund of Funds in the budget speech. And this is really a concept where we are saying we have reached a point where the model that the public sector funds has worked, but it has only led us yet. It will not take us to the next level. And we are really trying to think creatively about how the public sector funds. We are thinking and asking ourselves, are our DFIs really serving the purpose and serving the needs of the private sector of the day, or they need to be relooked at? And that is where the concept that we are developing around the National Fund of Funds is coming from. I see that my time is up, but I think I've done well in terms of I've been given it a little bit of time to continue, so I think what I can touch on is around, because I had already sort of rushed through my presentation, it's around I think we had a section in there where we were speaking about the private sector in society. And what we really were reflecting on is the fact that I think as a nation, we've had a lot of capacity in the past to actually build mega companies, but that capacity has not been able to be developed, because when you look at our successes, it is the Botswanas and the BCLs of the past, but now we have not been able to, we cannot point to a locally built company that we say this is a mega company that we have created for ourselves. And I think we had a section where we were speaking directly to the kind of barriers, how we are going to bring down barriers that and create an environment that actually allows this economy to build those kind of companies that we will all be proud of. I think we can imagine that if we can have just about 6 of the Botswana kind of companies in a nation like this, we would have gotten somewhere. And I think this is an aspiration that a lot of us share. One of the things that we also spoke about is just how we are going to be structuring for effective investment promotion. And I think the current, and I think it's a realization from us that the current environment actually to an extent does frustrate investors, because they come into the country and there's no clarity in terms of who is the leader. You know, sometimes they go to BITC, sometimes they go to Ministry of Finance, sometimes they go to Office of the President. So I think that lack of a lean structure is also causing problems. And in a government where we are talking about mega transformation projects, in a government where we are talking about mega companies, I think correcting that is going to be very, very significant, because the mega transformational projects are some of the ideas that we've also highlighted. And I'm so glad, because you know, when I looked at a lot of the things that we said in the budget speech, and just when I look across governments, I do see people, ministries running with a lot of the things that we've already said, and it's a positive sign that, you know, we will likely get somewhere. I think I've seen the Ministry of Education really rallying behind the whole Tibet idea because I think unemployment does keep a lot of us as policymakers and overall Botswana in general, it does keep us awake at night. But we have thought to ourselves that, we've built an economy that has produced a lot of social scientists, that has produced a lot of financial analysts, but is that what the economy really needs at the moment? And that is why we're really trying to rebuild a culture and rebuild an economy with a Tibet or vocational training model at heart. And this has really worked in other countries. And we do believe that there's a real opportunity for it to as soon as we've been able to change the thinking. I think as Botswana, and I always say to myself, but Naledi, if your child is to say to you that they're going to a brigade and the other, the neighbor's child is going to the University of Botswana, is that going to make you feel somehow? But as long as it's going to make me feel somehow, it means that we are failing as policymakers, and it is our obligation to ensure that we rebuild that culture. Because in other countries, going to a vocational training school and going to a university are actually at the same level of prestige because of the kind of careers that people are able to do when they get out of the schools. So it should really not be a secondary or second tier, be seen as a second tier kind of approach in our nation as is the current state of affairs. I think we also spoke a lot about our phase 2 where we spoke about stabilization and preparation for takeoff. And for us, when we look at state-owned enterprises and as we just started reflecting on them, it was just really starting with just the basics, get substantive leadership into the state-owned enterprises, get the boards fully functional, because I think it really doesn't make sense if you're going to be trusting this state-owned enterprises and you're expecting Standard Chartered to support them, but at the same time they don't have boards, they don't have substantial CEOs, and you're committing significant resources to them. I think for me that was quite a big anomaly that as government we are moving very fast to correct. But I think also just the legislation for some of these state-owned enterprises also doesn't allow them or give them the space to be transformed. So we are looking at that. If you look at the legislation around EPC, that is currently being looked at to ensure that the plans around separating production and separating it into three is something that we can easily be able to do when the legislation actually allows that. I think the idea about being a logistics hub and seeing ourselves as interlinked as a country is something that is also going to be very key in Botswana. And I also like the fact that when I look at the private sector, I've already started seeing that there are a lot of conversations that are happening around rail projects because they are going to be key. If you are central and there are no roads and rail projects that are coming into your country, then you won't be able to do this. So we are seeing private sector coming up with unsolicited proposals and saying, this is what we want to do, this is what we are thinking, and it's something that we are quite, we welcome. I think BERS is going to be a very key institution, and we're also looking at how to make it a lot more efficient. BERS is actually the heart of this economy. I know in the past you would think Botswana is, but when I look at the next 2, 3, 4, 5 years, I think BERS is the one that if you are to ask me to rank them and say which one should we get right, I'll put BERS at the top because it is so key. And we did some calculations actually when we were doing the budget speech, and we realized that if we are doing well, we could actually be able to get at least 30 to 40% more of what we are currently getting out of BERS. So that is something that we are pushing for significantly at the moment. I think I've largely covered a lot of the things that I wanted to speak to. Just that I started